We're here today with the Funny Apartments Round Table discussion. We're sitting here with obviously business partner Deryk Williamson. How's it going?
Good, buddy.
And then we got a guest here, a special guest, Garry Voigt, top 1% realtor in the Fraser Valley and specialist in foreclosures.
Thanks for having me on, boys.
So we're missing Adam today. Not by choice, but stuck in some traffic here in another snowy day and on the West Coast. Something we're not used to, but yeah, we're dealing with it. So anyways, yeah, today we're just going to talk about foreclosures. There's a few things we want to get into, mostly around, well, we want to get into some of your side of the, your lens of dealing with.
From the real estate side, and then we'll talk about the financing side as well a little bit.
Yeah, so like to start, I mean, there's obviously this perception that a foreclosure is a good deal. Like people think they're getting a good deal. Like in the, when I say a good deal, like meaning a buyer buying a foreclosure.
Right.
Getting
like
probably
why is that?
That seems to be the case. Everybody thinks they're going to get some sort of magical deal, better than an on-market deal. And in some markets, you may be able to get a better deal. What we're seeing right now, though, in this market is that there's a fraction of the amount of foreclosures as there is to normal listings. So the amount of people that are looking for the good deal is quite a bit, and the amount of product out there is very little. So we're seeing multiple people showing up at court and multiple offers on these properties at court. So for those of you who don't know really how the process works, we could go over that a little bit. And I can explain what I mean by multiple offers at court.
Yeah, because basically the first offer, and correct me if I'm wrong, but the first offer that goes in, they get an accepted offer at a certain price. That doesn't mean that property's theirs.
Right. So a lot of the time, people wait for there to be an accepted offer, because an accepted offer that goes firm cues basically the court process. So once the offer goes firm, then they set a court date, and at which point is when somebody else can have the opportunity to purchase property. So you may see a listing that gets reduced 3 to 4 times and then gets an accepted offer at this lower amount. And when there was
looks like the good deal,
looks like the good deal at the time, yes. But when in reality there might have been, a handful of people watching that property who have already viewed it, maybe cash buyers who are just waiting for somebody to start the process to take it to court.
So typically we're not going to get into like the legal minutia of what takes place during a foreclosure process. We'll keep that for a later episode. Maybe we'll bring on a lawyer to talk about that. But in that period when they market the property, it's called the redemption period. Typically in BC, a borrower has 6 months for redemption. So they could refinance it. They could sell it on their own in that period of time. Right. That's typically when the court would look to market the property.
Right.
But yeah, so like in that case, that's what you're saying. Like if there's no offers triggering that court date, they're just going to keep reducing it. And yeah, people do watch it because typically properties are usually marketed for like 3 months in BC. And then, I mean, usually like an offer won't come in until towards the end, right?
Yeah. Right.
Just because people are looking to get a deal and they know it's a damaged, troubled property, right?
Right. They're basically seeing if say I'm interested in it, they're seeing how low they're gonna reduce it to, instead of just throwing the offer in right away.
So again, like I don't want to get too much into legal stuff because it's completely different in Ontario. We got a lot of viewers here in Ontario, but I like just there. I mean, they could have a for sale sign up in 1 month, right?
Yeah. Right.
So on that, let's assume there's an accepted offer on a foreclosure. The court date's triggered. It's court today.
Right. So the deal would have to go firm first. So you have the original accepted offer they get basically their due diligence period. So they can put all their subjects in, do all of their due diligence, only the very first offer.
So when you say subjects, that could be subject to an inspection, subject to financing. It actually allows them time to get all those pieces sorted out, and then the deal goes firm once they've lifted those conditions and they make a deposit?
Yes, and that deposit is held in trust. So initially, the process is the exact same as if I was buying a non-foreclosure.
Okay.
Only for the very first offer. As soon as that original offer goes firm, they remove their subjects, they put their deposit in trust.
Then court's triggered.
Then court is triggered. So now they apply at the courts for a court date, which is usually around 3 weeks, at least in BC after that, depending on how busy the courts are.
So now going into court, anybody can show up with an offer.
Anybody can show up.
So there could be 20, 30, or 2 people.
There could
Or
be
nobody.
or nobody. There could be somebody who's, for instance, when I had a foreclosure listing, I went to every one of the viewings and I saw every single person that viewed the property. Somebody may show up that never even viewed it.
Right.
You know, they might have saw it online. They might know the area. They might know the piece of property, and they might just show up there and just cut a check.
Yeah.
Okay. So now all these, let's say there's 10 offers submitted through court.
Yes.
So how does that process work? Are they walking in like an auction style, or is it
Yeah. So
submitting an offer?
good question. So a lot of people think it's an auction style purchase where you go in there and everybody kind of puts their, you know, their offer amount up in the air, and the judge goes, we have this amount, you know, if somebody can do any better than that. But that's really not the case. In fact, usually for the simple ones, or for the, I would say, normal foreclosures, the whole process in court, from when it goes up to in front of the judge, might take 10 minutes, depending on how complex the case is. So basically everybody, including the original offer. So let's say, Dean, you made the original offer, you removed your subjects, the court date was triggered, we show up to court. You being the original offeree, have one more opportunity to make one more offer. Okay? And Deryk is also interested in the property. So he shows up to court and he has an opportunity to make an offer. All of these offers have to be concealed. Nobody can see what these offer prices are. Everybody gets one opportunity. That's it. So Deryk, you would give the lawyer your envelope with your offer in it, your subject for your offer. Only subject can be subject to court approval. Dean, you want to make another offer on the property because you understand the one that you originally had was low, and you're seeing there's other people at court. You make another offer.
But I have no idea what they're offering.
You have no idea what these other offers
So
are.
that's just like a...
They could be $1 more than the original offer. They could be $70,000 more than the original offer. Sometimes in court, it becomes more of a competition. You know, some people might get a little antsy and say, okay, we're going, X amount more. When in reality, it might only be a couple $1,000s difference. But nobody would ever know because it's all concealed.
So then, is it at the end of the day, or what is the timeline there for the judge to actually choose an offer?
Yeah, so usually you'll show up to court around, at least in BC, around 9:45 or 9 in the morning. You'll see when that specific case is up to the ballot. And, sometimes you'll wait around until you get to it. But usually, like I said, the judge will go through them fairly quickly. And, you may be there till 5 p.m. that day if it's a really sophisticated foreclosure.
Or it could be really quick.
Or you could be in and out within an hour, which is, which happens a lot as well.
Okay. So now, is there a standard timeline? Once that offer is accepted, is there a pretty standard timeline for completion?
So usually, depending on which lender it is, I've seen 14 days after court approval. I've seen 30 days after court approval.
So it's dependent on the financing. The existing lender.
It's usually, So the lender and the lawyer that they hire will determine.
So the lender that's foreclosed on the property.
Correct.
They're the one making that decision on the timeline. Okay.
Yes. So, and for example, if the initial offer has, completion 14 days after court approval, well, they're going to ask any other offer that comes into court, well, it has to be around 14 days after court approval because it's got to be a better offer than that original offer.
Yeah. Have you ever seen somebody not be able to follow through on completion? Let's say you get a 14-day window to complete on that property.
Yeah.
What if you can't get your stuff in order? Have you ever seen that?
That's a good question. I haven't personally seen it, but I know it does happen. There is complications. And at that point, I believe it would be the lawyers who would be hashing things out.
In that case, it'd probably be up to the lender's lawyer and the lender to approve an extension. The lender's essentially the one controlling the sale, right?
I bring that up because on the finance side, if you had a 14-day window with an accepted offer in hand, there's times that is not sufficient.
Not enough time.
Right? Sometimes these deals are taking 4 weeks, 5 weeks to close just due to documentation, appraisals, all these different factors, right?
Yep. And that's huge. I would always say if it was my personal buyer going in there on court date and they weren't able to have a full approval in place, let's say because they weren't the original offer, I always say be sure that you can finance this cash or you have a way of financing this.
For us on the specialized in private lending, we typically would go to court with the mindset that our buyer is going to close with private funds due to timeline.
As a worst case scenario, and if you have enough time.
And most of the time too is if you're going to court and you don't have the original accepted offer, you technically don't have a live offer,
right?
And banks won't actually even look at your file.
Exactly, and that's one of the biggest confusions that I see, and one of the biggest obstacles that I also see, because people don't understand that, you know, if you're not the first original offer, well, there's not going to be another accepted offer after that you can take to your mortgage broker or your bank to say,
to get approved.
Give me a pre-approval on this. I want to put an offer on it.
Yeah, and that's one resource that you can, as a broker, you can utilize. Like, you do have private lenders there. If the loan to value is in line, you do have that, but it's still never a guarantee, because in private lending, we are so worried about the property. And back to, which we can get into now, is like buying a property that's a foreclosure, and say, for example, you walk through it, looks good, everything's in good shape. You get an appraisal at that time. The appraisal comes in at the value it needs to come in at. Condition looks good, but then they go to take possession, and I know you have stories that we can get into, but it's not in the same condition as it was when you walk through the property. And now our private lender is like, I don't actually like that property. I don't want to lend on that property.
And there's
100%.
no real liability on that, correct?
No, there's no guarantees. That's a huge misconception, because, hey, it could be an awesome deal, but if the whole place was destroyed and you had to dump X amount of money into it to get it up to the par as what a normal listing would be at, is it still going to be a fantastic deal? What I always tell clients is expect for the place to be absolutely destroyed. Expect for the worst, because it really could be the worst. You know, Dean, you might go in and you might see a condo, and I would say, hey, just so that you know, if you write an offer on this normal listing, non-foreclosure, you know, the way you see it now in the contract is the way that it has to be upon possession. Where in a foreclosure, I would say, Dean, the way you see the property right now could be completely different than when you actually get possession of the property. It could be destroyed. It could have all the pipes removed, all the appliances gone. You know, it could be down to studs.
And that's usually a disgruntled borrower that's being foreclosed.
Yeah, think about it. These people don't care anymore.
Yeah.
Right?
Someone going through a foreclosure is not typically in a good situation or a good place in their life, right? And if an appliance, if they're cutting down to absolutely nothing left, maybe an appliance, stealing an appliance, ripping the cabinet, so
totally
that's all value to that.
Yeah, they might sell it. They might take in all the copper piping.
So what are some stories that... what are some real life stories that you've seen?
Well, I'll tell you, it's really common for the person who's being foreclosed on not even to give access. It becomes a hassle a lot of the time to even get access to the property. They don't even want to let anybody in. If they're mad that, first of all, they're getting foreclosed on, and second of all, that the reality of it's coming in, that their place is going to be sold and maybe they have nowhere to go. I've seen some nightmares. You go into the place and, I've had a foot of garbage on the floor for the whole upstairs, the whole downstairs. You got to walk on top of a foot of garbage. There's, people smoking in there, very common. Yeah. Mold, just some of the worst scenarios inside a house you've seen is pretty standard. Yeah. So, if they have a water leak and they know the place is going to be sold in the next coming months, well, why are they going to spend the money to get it fixed for the most part? For sure. Right? They're not going to be doing any of the house maintenance.
You can't. Obviously it's not right as a borrower to destroy the house or leave it in that condition, but you can understand these people maybe. We see it all the time. We see a ton of deals where, hey, clients in foreclosure, can you get them out of foreclosure, which is a very common file scenario that we see, which is very challenging to do. Private lenders nowadays are very conservative, and they do not want to pay out another lender's foreclosure. And in most cases, a private lender doesn't want to pay out another private lender, even regardless of foreclosure.
And the main, if you put yourself in the lender's shoes, if someone's in a foreclosure, there's typically a reason for it, right? Maybe they're laid off work, they can't make their payments, whatever the situation is. And if there's a good story, we might be able to get somebody to take that financing out. But if the guy's not working, if she's lost her job, if it's personal troubles, why would anybody want to get involved in that? It's likely going to happen again. And the last thing that any lender wants ever is to go through a foreclosure. It's terrible for them. As much as it's terrible for the borrower, it's terrible for the lender.
Yeah, sometimes it's just a sad story. And
like regardless of the hardship or whatever the case is, if it's if you're a broker, you would know no A lender is going to take out a foreclosure, never, and neither is a B lender. So just as a trigger point, if you're dealing with a client in foreclosure, for sure you're going to be placing that client with a private lender, 100%. And
so that's good for the public to know as well.
Absolutely.
Right. So even if the initial offer got, they got the pre-approval, it would be from a private lender.
No. So this is saying like if a borrower is in foreclosure himself,
and they're trying to save the property,
So, hey, like I missed 6 payments in a row with TD Bank. TD Bank is now foreclosing me. No other bank is going to pay out TD Bank because of that. No B lender is going to be paying out TD Bank because of that. So then you just know as a broker, if you get a deal like that, you need to go right to the private channel or call us and we'll help you out with that file. Because it's like, and then what I'm saying is most private lenders won't even take out that foreclosure because they know like, okay, what is this in foreclosure for? Like, what is a hardship? Like, it's got to be a really good story for them to now want to get involved into maybe putting themselves in that same situation. So,
and it's all case by case. But what I've seen recently is you need to have a minimum of 35% equity in the property to get a private lender involved. Because if you're at a higher threshold, if there's only 20% equity in the property, their worry is that if they go through foreclosure again, well, there's only 20% equity. If the market dips 10%, like it has kind of recently, then there's only 10% buffer for interest to accrue throughout the foreclosure process, right? And nobody wants to be in that situation. So,
I mean, like we've had some good cases. Like we paid out a foreclosure this month, or last month, February. We paid out a foreclosure with a lender that, an aggressive private lender that, plays in a bit of a riskier market. With these types of deals, but there was a really good story there. And
on that file specifically, a husband and wife went through a very bad divorce. The husband was,
which is common also.
The husband was the moneymaker in the situation, and he chose to stop paying the bills because it was a terrible separation, right? So they started missing payments with their existing lender. The lender went through foreclosure. We were able to bring, because it was the wife's property technically, her family home. So we brought her parents on. And we got a new private lender to pay them out. With the parents involved, there was enough income to make it make sense. They could afford the payments and allowed them to keep this house that had been in their family for 100 years. I think it was. Heritage home.
Yeah, that's a good point. I mean, there's all kinds of stories why the house could be in foreclosure. And everybody usually asks me, why is it in foreclosure? And there's one example right there. It could have been, a divorce and one party's, stopped paying. It could have been an inheritance. It could have been, anything. There's so many reasons.
Yeah, that's for sure. Like we've seen many cases where the son inherited this house.
Yeah,
they think like, great, I got a $500K house, but there's actually a $300K mortgage.
Exactly.
So you better sell it or pay the mortgage payment, right?
One question I actually get all the time from people going through foreclosure is they think that, let's say your property is worth $500,000. And you owe $400,000, and that mortgage is being foreclosed on. They feel that the property is going to be sold for $500,000, and they get nothing.
Right.
That is not the case 99% of the time. If it sells for $400,000, they're actually going to get that $100,000 back. That's their money. 99% of the time, that's the structure. Most people just don't understand. They feel that they're losing their house.
Less legal fees and whatnot.
Yeah, assuming everything's rolled.
Almost every mortgage commitment, like the borrower would be responsible for the lender's legal fees
for sure.
Case,
right? And we've seen files where the lender's legal fees are up to $10,000. Because these foreclosures can go on for years and years and years.
Some people just, if it was inherited, they just want the process to be over with and through and it's get their money.
Totally. It's totally depending on markets, provinces, what the rules are. Because in BC we have one of the toughest.
Yeah, we're talking all in BC here for everybody.
Because like the minute you're in foreclosure, most borrowers are like, okay, well, I'm just going to stop making my payment for good. And then that interest is accruing and whatnot. And if it's a private lender, typically when you get into arrears, your interest rate increases. And so that interest can really compound quickly. But we'll just kind of end on that note. Like one area from just like some advice to a borrower, just do whatever you can to make your mortgage payments in the event of like a hardship. And if you can't make those mortgage payments, talk to your lender, especially a private
100%.
lender. Like, don't ignore the lender. Like, lenders are more than willing to work with a borrower if they're communicating with them. Like, we have a case today. We just got notified that our lender is foreclosing on a borrower that we set up a mortgage for. And the lender is going to be foreclosing, and strictly because he was trying to communicate with the client. The client has been making payments. It's a construction deal. We know there's issues. Client hasn't been making payments, and the lender tried for months to contact this client, try to work something out, try to help them, try and look at other property, do whatever they could to get them out, and then try and work together to sell the property like on the market normally, not in foreclosure. The borrower just ignored the lender.
And that could have been from embarrassment. You know, like you never know what's going on the other end of the phone, but at the same time, like you said, communicate with the lender. If you're going to miss a payment, call them. They'll delay it. Like, they will work with you.
100%.
Speaking to private lenders, right? And even with your bank.
Even
call
banks,
your bank.
Like,
they might not be able to skip your payment, but they can at least make notes that you're trying to work with.
And as long as you make an attempt, like even just pay anything. Like if you only have $100 to put towards, put something towards it, show that you're actually trying.
They don't want to go into foreclosure.
And neither do you.
And they don't want to be wondering why you missed a payment, right? If you tell them, it's a different story.
Yeah, exactly. And just look to get out of the situation as soon as possible and sell it before it goes to foreclosure. So you don't have
their
some
own
poor stigma around your property that, you know, it's a damaged property or what have you. Like, sell it normally, stage it, do it properly, like with you, like a real estate agent. Like,
and you know why you guys don't loan out to the full value is because in case the property goes into foreclosure, they lose, you know, they're potentially losing that much value on the property.
For sure, absolutely.
That's why you do that much loan to value, right? Because the second that it's on there as a foreclosure, the value gets knocked down, you know, quite substantially.
For sure.
Right.
And I mean, you're just not selling it in an optimal position. You're not staging it. You're not doing all these marketing things that you would do.
So it would be a good idea to contact your mortgage holder, find out how much you owe on it, and how much you need basically to sell it to walk away. And maybe, you know, list it for a little bit under market value at that time, because the second that you get the foreclosure stigma on it, you're going to lose a ton of value right away.
Understand the foreclosure process in your market. We're going to do a good job with this topic. We're going to bring on a couple of lawyers.
That'd be a good idea.
In BC and Ontario, some of the top ones that we work with, Alberta as well. So you can understand and hopefully talk to your clients about that and why, you know, what that foreclosure process is, and try and ensure that you're ahead of it and you don't want to get into this. But the biggest, regardless of where you are, just communicate with your lender. That's like one piece of advice. And pay whatever you can. You know, regardless of what your payment is, just put whatever you can towards it to show that you're making an effort. I think that's a good kind of point to end this discussion on. This is, like I said, definitely could be a topic we'll talk more on. Thanks for coming out.
Thanks for having me on, guys. Appreciate it.
Super appreciate your time, and we'll definitely we'll bring you back about something maybe a little bit more positive.
We'll love to be back on.
It's just the nature of our business. We deal with a lot of these types of deals. So the whole point of this podcast series is to talk about topics that are relevant to alternative mortgage financing, and this is obviously one of them. So
for sure.
Any questions, just give us a call. If you guys have any other topics you'd like to see us talk about, just let us know.
Definitely comment. I mean, this is posted on YouTube, for Facebook, wherever you're streaming this, whether it's on our website, whatever it is. Feel free to comment below, send us an email, whatever. We'll talk about anything that's relevant to the mortgage industry, alternative financing to be specific. So thanks, and we'll chat soon.
So I thought I needed. So I